Good afternoon and welcome back to the Cash Corner podcast where we teach all things financial literacy. I'm one of the Pure Money mentors, Marcel Green, and today we have an exclusive interview with Michigan President at Citizens, Yasmeen Jasey. Now, I had the privilege of interviewing her and picking her brain on her opinions on financial literacy, as well as the banking industry and how it works and how citizens can offer financial knowledge to the community. Stay tuned for this exclusive interview right after this. All right. Well, good afternoon. How's your day been?
It's been busy. It's been nonstop, but I've been looking forward to this. So thank you for having me.
All right. And thank you. And I appreciate you for, giving the time out of your day to come to this Zoom call and indulge me in our little interview.
No, this is great.
So, here to pick your brain and, see, as someone in the financial industry myself, get some insights and for the people listening in, some insights on how they can maneuver in the financial space as well.
It's an important topic, so I appreciate that you're doing this.
No, of course, of course. And I want to start off with, can you give a brief share into your journey in banking and how you became the president at Citizens?
Yeah, absolutely. So again, I just want to thank you again for having me on your show, on your podcast. At Citizens, we really do believe in financial education. It's extremely important. It's how we elevate our clients and our community. And so this is just critically important to us. And so thank you again for having me. As for my journey, 30 years plus in banking, where I've been in financial services, and I've actually had a career that actually transcended across multiple different lines of business. And so I've had the pleasure of being able to work in the consumer bank and seeing firsthand, how your everyday individual comes in, what they're saving, how they're saving, buying their first house, buying their first car, opening their children's first account, all the way through to brand new businesses getting started and volunteering within the community and how that elevates the various states that the communities are in and the communities that those organizations are in. And so, I've been able to kind of witness firsthand all these various areas, and it helped me make a decision that I would love to be able to do something where I can give back across the board. And so my last journey prior to taking on this role was in the corporate bank, where I got to work with just the most amazing partners that in the corporate banking space, where they had needs from investment to loans to coordinating strategies with the bank and how we can elevate them. And so each and every one of those experiences led me to want to be able to bring all those pieces together and be able to help the team collaborate so that we can give back together. And that's kind of my journey into this role. I've worked in banking for over 30 years. My background is I did my undergrad at the University of Windsor in finance, and I did my in economics, and then I did my master's there part-time while I was working for a bank. And so that kind of led me into banking, and I stayed there. And now I have been fortunate enough to be in this position for 3.5 years, where I was hired as the Michigan market executive and recently was given the privilege of being Michigan market executive, and recently was given the privilege of being the Michigan president. And so that's kind of how I got here.
Wow, that sounds like quite the journey.
It was quite the journey, but very meaningful.
Absolutely, absolutely. And what would you say your role as president entails on a day-to-day basis?
So it goes back to all those various roles that I had experienced on a day-to-day basis. I try to, I use all the knowledge that I have to have some level of empathy to the teams that are on the front line, regardless of business. My primary focus is helping to elevate the corporate bank. to help mid-sized companies achieve their fullest potential and to work with the community to be able to support those organizations. But the second part of my job is bringing all those pieces together, because you're not just one line of business. You're not just a business doing business with my team. You are a mom who and a dad who are putting their child through college. You're someone who's buying their first home. You're investing in our community and you're volunteering. And so we have areas in the bank that all support all those various aspects of our clients' needs. And I help to bring them all together so that we're collaborating and giving our best to the entire relationship that we do business with.
Excellent. And how would you say throughout your entire journey, throughout your career, how would you say your view of personal finance has evolved?
So it's interesting that you say that. Our CEO has a common saying, and he talks about how banking is a noble profession. And I've really personally come to believe that over my career. I think, you hear a lot of anecdotes out there about bankers and what they're like and what they do. But I will tell you that there is no better feeling than being able to guide a company or an individual into financial stability and success, to be there and partner with them on a day-to-day basis. Early on in my career, I saw personal finances really just a bunch of numbers, an interest rate, a credit score. But really, when you put all of those together and you help people understand, their credit score and how it works, when you show them how they can budget and plan for the future, it's gratifying. You feel like you've helped them stand up and be successful. You've helped guide them down a path that maybe they wouldn't have been able to achieve had it not been for your guidance. And so I really do think it's a noble profession. I think it's something that every single person should understand and know. And I think it's our responsibility to make sure that everyone who walks through our door gets the same level of attention so that they can achieve their personal financial goals.
Absolutely. Going through and helping as many customers as you have, that makes me think of the question, on average, how financially literate do you think the average consumer is today?
This is it's a tough question, right? We have some definite gaps, right? We're making some really good progress. I think that we still have a long way to go, right? We see all the time that there are individuals who don't even know how to get their credit score to be able to remedy what's on it. We see that, there are folks out there that still feel like they they aren't saving early on, even if it's just a few dollars. They don't see the value in it. We still see folks who are spending more than they're making. And so, I do think that I think there's some studies out there that show that about 50% of the US is still financially, needs help in terms of financial literacy. They're not where they really need to be in order to be successful. But again, the good news here is that given the fact that most people have some sort of a smartphone, you really do have access to a lot of the digital world. There is information out there that anyone could access. It doesn't necessarily have to be having a personal, banker helping you guide you through it. That would be ideal. But if you don't have access to that immediately, you can just search for programs that help you budget, that help you think about your college career, that help you, figure out whether or not you should work certain number of hours and set some money aside and then maybe take on a trade. Like there are programs out there that'll help you with your financial stability and being able to budget and save and understand credit and look at your credit score. So I think, you know, we would love to be that trusted partner for people, but if they don't have somebody that they can go to, they certainly can do something as simple as just searching for a budgeting app and starting there.
Okay. And what would you say are the most common mistakes or misconceptions you see among individuals or families?
It's interesting. I would say that there are probably three things that I would say are the most prevalent. One is simple budgeting, right? Balancing what money you make and what goes out the door. Being able to focus on your needs and having wants that you want to get to, but saving for those wants, and then balancing. I would say the second thing is balancing debt versus savings. So those needs you take care of with the money that you make, those wants, you may have to take on a little bit of debt, but you still want to balance that out, right? If you're going to get a mortgage, make sure that you're within your means so that if there's a hiccup down the line, you're not struggling to pay that mortgage. You're not buying the $200,000 home, you're buying the $125,000 home, because that gives you a little bit of buffer. So I'd say number one is budget, number two is balancing debt and savings. And the number three, which is near and dear to my heart, is save early. Even if you're 18 years old, you're making $150 a week on a part-time job, save $15. If you're making $150 a month, save $15, save $10. You set that aside and don't touch it. You'll forget about it. You won't, you'll learn to live without it. There is so much data out there that shows you that if you start saving early personally as a young person, your opportunity for wealth is far greater in the long term, just by sacrificing a tiny bit of your saving, to set aside just a tiny bit as you start out your career. So those are the three things that I think, people kind of make a mistake around. They don't save early, they don't balance, and they don't budget.
Absolutely. Saving and living below your means is something that it's a tough pill for a lot of people to swallow. A lot of people want to, they make $100,000. They want to live like they make $100,000. But sometimes, you make 100,000 and you live like you make 50K. That's all
Yes.
that much more money you have to save.
You're
Yes.
spot on with that. And, look, I get it. There's some people who are living paycheck to paycheck, and that makes it a lot harder. I'm talking about young people who are just starting out, even in a part-time job, set aside a little bit, right? So,
Hmm. Absolutely. And you touched on it earlier, but there's an opportunity for you to like touch on it in a little bit more detail. How is citizens addressing financial literacy in the communities that it serves?
well, this is kind of core to our belief. Like, this is what we are enthusiastic about. Citizens, we feel like it's really important to have financial knowledge as a foundation so that you can have long-term financial success. And we're actually very deeply committed to this space. We have individuals that are in our communities that are not just helping by volunteering with things like I know we do a lot with the junior achievement. We do a lot with, helping people with tax prep. We're doing a lot when it comes to not just young people, but helping, with organizations that are developing skilled workforce so that they can have enough money to have financial stability, and then helping them with their budgeting and helping them have some confidence so that they can reach their goals. This is something that we feel is our obligation. This isn't something that we take for granted. We believe that this is extremely important, and it helps elevate our entire community. We've always said that when our communities thrive, then the local businesses around them thrive. And when the local businesses around them thrive, the entire economy thrives. So it really benefits everyone when we help to elevate people in their financial stability. Just kind of an example, in 2025, we actually committed $2.6 million in financial education grants and ongoing volunteering to support 134 local nonprofits. Like, through our Citizens Money Essentials program, our team volunteers to lead all sorts of, workshops, kind of like I just talked about, helping with individuals and small businesses in both English and Spanish, just to get them ahead, right? And then, our people, they love to volunteer, not just their treasure, but their time. And so they serve as mentors and they provide, they're on local nonprofits. So we try to cover the spectrum of not just financial literacy, but also helping people with workforce development so that they can get to a point where they have the ability to have a good, solid life, and have that financial stability where they can budget and save.
Great, great. And what would you say would be the digital tools or resources that Citizens offers to help people manage that money specifically?
Well, we offer a really great online banking capability. It's a service that helps individuals and business managers manage their financial efficiency more effectively, to be honest. It's a great tool. I actually use it myself. I think that it doesn't matter how much you know or don't know. It always is nice to have those various tools. We also offer learning resources. Uh, Learning resources and tools around managing your personal and business finance, preparing for life events like college. I think we have an entire program dedicated to helping with college and those kind of life events, home ownership. We've got dedicated mortgage folks and programs that can help with that. And then, like I talked earlier, start saving, invest for your future and for retirement, have an emergency fund, and think more long term. Those are all areas that we provide support in from a technology perspective or tools perspective.
Okay, and going off that, how has technology changed the way people interact with their finances? And what would you suggest consumers should be using more of?
So I think that, again, we talked about how almost everyone has some form of a smartphone these days, right? It's almost become, a lifeline to a lot of information that folks would normally not have access to. And so I think, if you look at what digital tools are available, it actually does make your life easier. You can easily get personal insights and be able to manage your finances right from your smartphone or your laptop, right? Like this isn't something that is uh, unavailable or exclusive. It's available to anybody. They could learn to budget, to save, to invest. Uh, it's fairly user friendly. There are programs like Savings Tracker or budget estimator. Um, and these kind of tools make it so that it's accessible for everyone. It helps them be able to determine what they want as goals as well. It helps them to monitor their spending habits. There are some that'll even tell you, you didn't spend you spent less this week. Do you want to put away this amount in your savings account? Or do you really need to spend X on this? Do you want to put it in your savings account on, instead? So it even has like prompts that'll say like, do you really need this? Do you really want this? And then do you want to put it aside? And so it's really kind of user friendly. Um, the other part is that if you're not digitally savvy and you don't want to use your phone or you don't trust, like there's a lot of reasons why somebody don't want it that doesn't want to download an app or use a program that might be associated with another organization. You can always go into the branches and talk to somebody who can help you work through your financial position, where you want to be and how to get there. We call it a citizen's checkup. And any branch is willing to do that. They can just walk in the door and talk to a real person face to face and walk through what their goals are and how they might be able to achieve those goals. We quite honestly believe it's a partnership. And so we're there, we're willing, we're available, and we're ready. And our experienced bankers are happy to, help out. I'm going to give you one quick example. Just recently, someone I knew, their son wanted to open an account. He's 12. And She was telling me about it, and and when he had originally went to go, he was very nervous about it. When he originally went to go open the account, there were some, issues with the process, and I can't remember exactly what it was. It wasn't anything big, but I told her I'll go with you, and we'll go together and we'll help him open his account. And the people at the branch were fantastic. They were caring. They understood that this money that he was depositing, he felt like was going to go into the abyss. They took their time to explain it. They made him feel, important. And all of that, I think, is something you can still get at the branch. It's an experience for both young people and those who aren't comfortable going online through digital to have face to face, to get to know the people. And they are so experienced. They can make sure that the experience itself is one that is a positive one.
Hmm. That's phenomenal that technology has been used in such a way at the banks and throughout the world of finance. And that makes me beg the question, what do you see the future of personal banking looking like? And are people going to still be walking into branches 10, 20 years from now?
Yeah, I would say, it's funny that you asked that question because over the years that I have been in banking, we have had, it's kind of like, I don't know if you ever saw the movie Back to the Future. By now, they basically said we'd be flying in cars, right?
Yeah.
Technology can solve some things, but it's not going to do everything. And in banking, we have talked about over the years how that might make branches insignificant or maybe not utilized the way that it had been. And to be quite honest, it has created efficiencies in the banking, in the branch network. Today, you can get kind of some of the basic stuff off of the digital and self-service tools, but the branches are more important than ever, in my opinion, because uh, they're still there to be able to ask the questions that you might not even think about searching, right? They're still there with experience and the expertise to be able to guide you through the process. They're more of a personalized service. Um, it's almost like, I don't know, it's almost like you have your own personal, I mean, we call them personal bankers, but it truly is like you have your own personal banker who can actually sit down, talk to you, and provide advice. And I just don't think that that part of it, that human part of it, is ever going to go away. People always still need to feel that connection. Um, and I think there's a statistic out there that like 80% of the accounts are still opened in branch. Like not everyone is doing the digital branch. That could be in part, because of some of the regulatory, rules around opening accounts. But I just think that when people have big life moments, they want to talk to someone about buying a house. They want to talk to somebody about the big college. They want to feel better that someone can tell them what they can expect because they've seen it before. They want to know what they need to save for retirement, and they want somebody to walk through it with them. I just don't think that that's ever going to go away. I think technology is going to make things more effective and more efficient and more and we're going to be able, because of that, we're going to be able to even do better for our clients. But I don't think the branches will ever be replaced, at least while I'm still in banking.
So it's in the human element is just something that no machine, no AI, nothing technology can produce can replace.
Yeah, that's right. That's right.
Okay. Well, bringing up the subject, how do you think AI is changing how banks interact with customers, and what should customers be aware of when it comes to that?
So, it's funny because I think AI is changing at super speeds. And when the internet came out, we thought that was fast. And then, iPhones, like handheld computers came out, we thought that was fast. But I think AI is super speed. Like it is coming out fast. It is advancing quickly. And I think it's going to transform banking. I think it'll make us more efficient because I think we're going to implement it responsibly. Um, I know we're pretty excited. We have an entire innovation team around this. We want to make sure we're adopting it safely, that we're utilizing generative AI, but responsibly so that we're protecting our customers. Um, because we actually believe that it's actually going to provide our customers with a way to get things, you know, transact faster and more efficiently. Um, but for customers and for any consumers that are out there in general, whether they bank with Citizens or not, it's not a replacement for human judgment, right? We still think big, huge financial decisions should be made through a conversation and through some expert guidance based on historical information that individual and the experience that individual has. So, use it responsibly. We're looking at it very responsibly. We're making sure that we're protecting our customers and their information. We think it's going to make things more effective, but we don't think it's going to completely replace the human aspect of banking.
Okay, okay. Great, great advice and great knowledge that even I didn't know about. Okay. So
Appreciate
I
that.
I heard your primary focus is supporting businesses and specifically new business owners or people who are thinking about creating a business. So a question I have for you is, what are the most common financial mistakes you see new entrepreneurs make, and how can they avoid them?
I would say that, for newer, like brand new business owners, making sure that they are looking at their long-term goals, keeping in mind, what those long-term goals are, what they want to achieve, and being nimble, not understanding that you may have a plan and you're going to try to achieve that end result, but there may be multiple paths to achieving that result, and you need to be able to pivot and get on another path to ensure the success of your business. I would say as the company starts to grow, they ought to be thinking about their future and succession and not to delay that. Oftentimes, as the company is growing, they're so engaged in their growth and their profitability and the success that they might be having that they lose sight of succession. And succession can start early. It doesn't have to be 3 years before you retire or 5 years before you sell a business. That is a conversation that we feel is too complex to start late. You should be having those conversations early on in your growth and, even more importantly, at least as you're kind of in the mid part of that growth, you ought to be having that. Even if there's 15 years left that you're still going to be involved in that organization, don't wait too long to plan early and make sure that you have someone alongside that's helping you guide you through some of those difficult decisions so that you're ready, to be able to transition that company. When you've done all the work to be successful, you want to have that opportunity to be able to transition to retirement.
Okay, and speaking on the newer or people interested in business, can you walk us through what makes a business loan ready and what do you want to see before approving the financing?
So, I think that we tend to be, banking in general is typically uh, lending to institutions or lending to organizations that have a decent cash flow that can cover their expenses. I mean, it becomes that simple, right? You need to have a good cash flow to cover your expenses, then you become a little bit more loan ready. The way that we mitigate that for those who are startups is that you have to have, your credit, you have to have good credit, you have to have some historical numbers to provide. You've got to make sure that you're documenting your success and how you're going to get to the next stage of your success. I think those are kind of, the pathway to becoming loan ready. Loan ready, I guess, in quotation marks. The typically we want to see a couple of years of business history, and it's some strength in how they're performing so that we know that they can cover their expenses. That's kind of the simplistic view, but we can also work with them as they're growing to get them to that point where they are going to be loan ready.
Okay, and how would a young or early stage business access capital if they don't yet qualify for traditional financing?
So, I think that there are there are opportunities to be able to get some guidance online for programs that are available out there for new companies. There might be some grants available. There may be some specialized lending opportunities outside of banking. Uh, I think that, you tap into what experts are out there. I would say don't be shy to ask for guidance, whether it's from individuals or from information, research what programs there are out there. Explore an SBA loan. That's a great partnership that banks have to be able to do business with a company that may not quite be ready to be on their own. In addition to the SBA, there's other programs out there through the Michigan Economic Development Corp or other CDFIs that have grants and lending solutions that could help get them to the point where they're ready to be able to be more bank ready. A lot of these loans can be used for working capital, for equipment purchases, especially if they're looking to expand and hire. There are grants available for workforce development. So there are opportunities to be able to get financing or get grants early on, even before you start recognizing a consistent revenue and profitability. And there's other things like if you're an established individual and you can do a HELOC, which is a loan on top of your mortgage, that might work. You could also get you can do a HELOC, that would be a loan against your own personal strength. You can take equity out of your home. You could apply for a business credit card. These are also ways that you can, it relies on your own personal guarantee or your personal wealth to be able to substantiate your business, but that would be only temporary until it's able to stand on its own. And to be honest, a lot of banks love to see, and a lot of lenders like to see that you've committed to the business that you're trying to grow. And so that only builds confidence when you are ready to be loan ready and do a loan directly off of the operational cash flow.
Okay, and now like contributing to their financing, now going off into the mindset and the approach of a young up and coming person who want to start a business. What did have you seen that separates the entrepreneurs who succeed long term from those who struggle?
Again, I think planning is critical. Entrepreneurs are actually known for having big ideas and reacting and leaning into something that people like myself, I went into banking because I'm conservative. I do not have that, entrepreneurial hat where I would take chances or look to develop something. They want to lead. They don't want to be led. They want to have success in something that they create. They're very creative. And so I think one of the things that, could really help them is spend a little time planning for the future. Things, again, it could be as far down the path as succession planning to help you stay prepared, right? Like, what are you going to do in 5 years, 10 years, 15 years, 20 years? What if there's a personal life event, somebody gets sick? What if there's an economic shift? We've seen a couple just recently where there's some uncertainty in the market or financial crisis that occurs. So you want to be able to be prepared for that. And the only way that you can do that is by planning. Like I said earlier on, taking one path is great, but if you have multiple paths to achieve that goal and you know where you can pivot to, I think that helps you out a little bit more. So I think early planning provides clarity and control over your and success. And that's what I would suggest young entrepreneurs. I know you have great ideas out there. I know you're going to probably be very successful, but you'll even have an opportunity to be more successful if you just plan for unexpected events in the future.
Okay, so we talked about the financing that new businesses should do and the mindset they should have. What are financial tools or services that every new business owner should be using from day one?
So again, I would say be flexible about your credit options, right? We talked about the programs that are out there. We talked about CDFIs, which are these are community organizations that we also support sometimes where we can't lend directly, we lend through a community organization. So I would look at those. I would look at, a HELOC Again, taking your own personal wealth and putting a little bit in it just to get you started up front. And then talk to a banker, right? The bankers, we have 20,000 employees at Citizens. Many of them are on the front line, and they have a tremendous amount of experience with companies that have started, where they can go get access to additional support, information that could be beneficial to them. So it really doesn't matter where they are in their journey. They can reach out and talk to somebody in a bank, talk to their banker, right? And at Citizens, we offer a program called Citizens for Startups. That is designed to provide them with kind of the advice and the resources they need for those early stage entrepreneurial individuals. So it just means the key is know where to start. Talk to a banker, do a little bit of research. There are programs out there. We have a program that we can help with if they're interested, and it helps them get on their journey and their path.
Okay, and wrapping up the business portion, what is one piece of financial advice you wish young entrepreneurs took more seriously in their first couple of years of starting their business?
Um, okay. I would say that one piece of advice is make it personal and practical, right? I know we all have a lot of energy. We want to be able to lean in really quickly and we want to just move forward very fast, but take time to put together a good plan and, connect the plan with your business goals and find people who can help you reach your goals. You don't have to do it on your own.
Okay. All right, and now I'm going to talk more about some personal insight into your life and how finance has changed or been differently in your life. So, what's one personal finance lesson you wish everyone learned in school that they don't teach?
I would say save early, save early, save early. Because I think that it is really important to put away a little bit. You can do this calculation. I think it's out there on I think it's like let me think. Hold on a second. I wrote it down somewhere. Um, I think it's called I can get it to you. It's a government website that allows you to basically plug in information about what it would take. And I'll get it for you. I can always send it to you another time because I did write it down. Yeah, it's called investor.gov. So on investor.gov, you can go on there and you can say, okay, if I had $1,000 to start that I saved for babysitting and I put in $100 a month for the next, 25 years, what would I get based on normal interest? And just kind of play with those numbers and take a look at how little it takes to grow that money. I think you'd find it a lot. I think listeners would find it interesting regardless of what stage they're at to kind of play with those numbers. And that's kind of the piece of advice that I would give is save early and take a look at how that might benefit you.
All right. And now, from a personal standpoint, what would you say is the best financial decision that you've personally made and one that you don't really regret but would rather do differently?
So I personally, when I started working and I got a full-time job, I made it a goal to pay off my debt quickly, right? I mean, there were things that I wanted that I just did not get, and I only, paid for the things I needed. I made a decision to make sure to put away, $25 in a retirement account and $25 in an emergency/fun account a month. It wasn't a lot, but it was what I could afford. And the rest, I paid down the most expensive debt that I had because when I graduated from college, I had a ton of debt. And so or what I felt like was a ton of debt. So I focused on paying off my debt quickly and so that I didn't have to incur tremendous interest charges. Now, what could I have done differently? I paid for my own education. I had I worked, but I also spent probably more than I made. And that was me walking through the campus, and if they gave me a credit card and gave me a mug, I was happy. If they gave me 10% off my purchase and gave me a credit card, I was happy. I probably did too many of those, and I ended up with too much in credit card debt, which took me a little bit longer to get to a point where I was debt free when I started working. So I would do that differently. I would forego the t-shirt and the mug and the 10% discount, and I would just pay for what I had, and I would buy what I had money to buy and not go beyond my means.
Okay, okay. And now we're on to like our quick fire segment where I give you an option between A or B, and then you tell me which one you would rather do and why.
Okay?
So, in terms of budgeting, would you rather have a budgeting app or a traditional spreadsheet?
A spreadsheet. I'm old school. I can't help it.
You like
That's what
writing
I
down and seeing
use.
numbers?
What's that?
Like writing down and seeing the numbers?
I have my Excel spreadsheet. I can change the numbers as needed. I see it all on one page. I have everything on one page. That's just me. Others might prefer an app or a digital budgeting app.
I'm the same way. I'm just so used to Excel or apps like that that I just manually type it in without a second thought,
Yeah.
honestly. And which one would you rather have? An emergency fund or would you rather invest first?
So remember when I told you I was conservative?
Yes.
Emergency fund. I think I have to have just a handful of dollars for a rainy day just in case. Once I have that, I'm happy to go into the investing portion, but it has to be an emergency fund.
All right, all right. I'm a little, I do a bit of balance of both. I make sure I have enough to where if a rainy day happens, I have enough for set aside. But I also try to play the stock market and see where I can get lucky in terms of
That
all that stuff.
that's the perfect balance. You got a balanced approach, and I think that's the key.
All right. And to close it out, um, what is some like me personally, I'm a finance student at Wayne State, just graduated my undergrad in finance, and currently am studying for my graduate degree in finance. And I'm trying to transition into the banking slash financial industry as a whole. So, what would you say to people like me who are trying to transition and go from, okay, I'm in school and now applying that knowledge and transitioning to the job slash career portion, and how do they get their foot wet in the banking industry?
Yeah, I think that's a great question. It is exactly what someone like me wants to hear. So that's awesome. I think we need more young people interested in finance and coming into the banking world. The banking industry isn't just about numbers. It has every single opportunity to be in various different careers, whether it's finance, accounting, regulatory, government, marketing, public relations, you name it. We've got, media folks. There is a path for anybody who gets in one role to be able to work their way around the industry into a role that fits. I would suggest that, you look for opportunities. There's thousands of banks out there. Here in Michigan, we have banks of all sizes. There's credit unions, there's fintechs. I would say apply for entry-level positions at any of those, whether it's a teller, an analyst, apply for all those positions. Doesn't really matter what financial industry, like what financial company it is, as long as it's within the industry. And get an internship, get a co-op job, uh, just understand what it's all about. Uh, I would say also that the other part of it is when you're graduating, when you're applying for jobs in financial institutions, again, regardless of which one you choose, I would use social media and see who's connected to who, right? It's okay to reach out to somebody that you may be connected with on, say, LinkedIn and ask them, can you give a good word about me to this employer? Because if they do, that just puts you at the top. You still have to go through the interview, you still have to make your own way, but getting a little bit of help by somebody who knows you, who can advocate for you, is definitely something that I would recommend as you're looking at finding jobs within the industry. And lastly, as you talk to people, go to organizations and community events that have people that are in this space, other financial professionals that are in this space, and see if you can find a mentor. Because that's, again, somebody who's going to be there to help advocate for you as they're out, talking to people who might need somebody. So that's what I would suggest as you continue to advance your career in this space. And thank you for choosing finance.
Well, I appreciate it, and I appreciate the advice myself, as long as a lot of listeners will definitely use that and be a sponge and absorb the knowledge that you just gave us. And where can listeners learn more about Citizens Financial Literacy resources?
So you can go right on our website, citizensbank.com. That is a great way to be able to navigate. It's pretty easy to navigate. You can just go on the website. It has all those various tools available to them. That's probably the best way to be able to get access.
Okay. And uh, another personal question. What do you hope your legacy is, financially or professionally, in the Michigan region?
So I have become very partial to Michigan. I was actually born in Canada. I went to school in Windsor. You saw that in my and but I've been working in Michigan almost my entire career. So I'm very partial to Michigan. I think it's a great state. I think we have the smartest people, hardworking, kind, generous individuals. So my goal is to do as much as I possibly can to help every single person that wants to have, an opportunity to help to break systemic cycles that are out there by giving access to advice or tools early to work with organizations that help both individuals and businesses, not just train people, but upskill and reskill so that they can get good, solid jobs and have financial stability. And, most importantly, I want to help Michigan's population grow because this is we've got four seasons, we've got great universities, we've got, talented individuals. People ought to be, you know, able to work and live and play in this space and raise their families in Michigan because I do think that it's one of the best states to live in.
Absolutely, absolutely. And to close it out, is there any final piece of advice for people who out there who want to take control of their financial future?
I would just say, don't hesitate to walk into a branch and ask a banker for help. Everybody wants to help. And so I would say, as you're going through your financial journey, regardless of the stage that you're in, early, mid, late, talk to your banker. Uh, they can, half hour, 15 minutes, an hour, they can help you to maybe recognize a path that you need to be on in order to achieve your goals.
All right. Well, that ends the episode. Thank you, Yasmin, for your time today, and thank you for not only giving knowledge to the people who are curious about financial literacy and how to start a business and how to get into making it, but for me as well, as someone who is in the financial industry, I mean, who is in the financial industry studying and going to school for finance, hearing someone who's experienced and who is into the industry as you are, it really gave me a lot of insight and wherewithal on, how to navigate within the space.
Well, I
So
I really appreciate your time, Marcel. This was a lot of fun for me too, and it was really nice to meet you.
it was nice to meet you as well.